Hey all, welcome to ShareTrek. This is Raj here. I hope you guys are doing well. Today I want to talk to you again about Ginkgo Bioworks. As we see the stock price of DNA staying sluggish despite tremendous potential, we need to look for more information to understand why the sentiment is bearish for DNA. In my last video on DNA, I spoke about possibility of range-bound swing trading. That is very much on the cards, and I'll discuss trading ranges as well in this video. But I think let's take a closer look at Ginkgo Bioworks. Let's get started. Friends, I have been searching for more information on what is ailing the DNA stock price. As when we look at their offerings, it looks attractive and promises tremendous value. Among our entire watch list of companies, Ginkgo Bioworks is the only one which has got regular news coming up every couple of months or every month about them signing up some biosecurity client or other. And there is always some activities going on around DNA. So I thought let us have a quick look and see why the bearish sentiment still persists heavily for Ginkgo Bioworks, ticker symbol DNA. Today I have picked up some ideas and would like to share with you before I start looking at the swing trading range for this stock. First, in my search, I do not see much mention about the need for them to announce optimization or rationalization of assets and resources from all their acquisitions. This is still my major concern. Many believe that most acquisitions were small, so it's a moot point. But personally, I feel that whenever a company goes on an acquisition spree and acquires a whole bunch of companies, it has to realize the synergies of equipment, personnel, and everything, and it has to rationalize and realize some operational gains, some capital gains, and so on. So I'm looking forward to that. But that's not a showstopper as such. Second, I'm bullish about the biosecurity product in terms of its ability to generate incremental and reliable revenue. Let us look at the latest filing from DNA, and we can see that biosecurity is the largest revenue provider, with foundry revenue coming second at almost 75% of biosecurity revenue. In terms of profitability, biosecurity seems to have less expenses in terms of R&D as well as administrative and general expenses, while research and development costs on foundry is 3 times more than the revenue it brings in. In this context, there was a very interesting point in an article in Seeking Alpha where the author pointed out to the fact that not only has foundry revenue dropped, but also 40% of the already dropped or reduced foundry revenue is coming from associated parties. You can see it on the table here. At the same time, geosecurity income has increased significantly from 2021 to 2022. However, I am not sure if the low cost of R&D in this segment is a negative, in the sense that they may not be staying on top of the game, but I would like to study a little more on this aspect before I form a conclusion out there. I think this raises the concern about the sustainability of the foundry business, but the biosecurity arm looks decent despite a marginal drop in revenues compared to the previous year, same quarter. The stock-based compensation is also adding to the insider holdings and can cause very long-term hangover on the stock price and keep it suppressed. Finally, I would like to show another table that we have seen before, and that is the institutional holdings. This is where we face a very immediate risk as the market sentiment goes down and the DNA share approaches the $1 level. This can spur some large institutional holders to dump the stock, and if that happens, the share price can quickly fall very sharply. And also, we have to remember that the NASDAQ will then give them a notice about listing requirements, same thing like what's happening to SKZ Biotech. So my conclusion is that the risk in DNA stock has increased a little more with our awareness of all these issues. And we still are watching what happens to SQZ Biotech that got a notice from NASDAQ as their share stayed below $1. Can that happen to DNA, especially in light of a short seller report with a bunch of allegations? And as I said in my video yesterday, valuation is market sentiment on top of fundamentals. For companies that are not profitable, market sentiment gives them value, and the positive market sentiment is due to either the founder, the promise of the technology or product, etc. Right now, there's a real risk of DNA losing the advantage of positive market sentiment. The technicals will graphically show the change in sentiments. So let us have a look at the TradingView platform and see what it looks like. Here we are in the chart for Ginkgo Bioworks, and as you can see, we are in a sharp fall, and this diagonal line of resistance of the bear channel is still very much intact. I'm just going to draw it down further, and as you can see today, we were held up by support at 1.59. If it wasn't for the support, we would have fallen down further. And as you can see, the momentum is very low and the MACD is also bearish. So things are not looking that great for Ginkgo Bioworks, and this indicates a consistent drop in sentiment towards Ginkgo Bioworks. There is no new news out here as such. And what puzzles me basically is the fact that they are expanding their business. This is a very, very strange situation. They seem to be stretching themselves very thin. They are expanding their business. They are signing up something or the other in the biosecurity every other month. And they are signing up alliances for creating new enzymes. And yet they are not getting profitable, and their share price is continuing to keep on falling. So I do have holdings of DNA a little bit in one of the accounts. I just discovered I have it, but not too much. But I am waiting to buy it somewhere around 158, 1.58. And I'm looking at potentially doing some kind of a swing trading with it. So let's look at potential swing trading ranges out here. So in order to take a closer look at the price ranges, I have just collapsed the MACD, and I'm also going to collapse the momentum indicator. So let's look at the chart. Now we have the price coming all the way down here. So I'm going to draw a trend line out here. And this is going to be the next level of support if the price were to fall below this. So I'm thinking that at around 1.58, Ginkgo Bioworks becomes attractive. But I don't think one should look at it for the long term, because in the long term, I personally feel that DNA shares are not going to do very well, because there's a lot of insider shareholding, especially the ones which are given as employee options. Now, employee holdings are most likely to come out into the market as and when the share price goes up, because they would need it for their own requirements. So that's part one. The other part is that there are large institutional holders, as we saw in the chart earlier. And many of these institutional holders have got their own strategies and plans to which they stick to, and they have investment rules. So if Ginkgo were to fall below a particular level, it's possible that it may trigger the rules in one of those holdings companies, and they may unload a whole lot of shares at once, and that could depress the share price further. So the swing trading opportunity I'm talking about has got risks to it. I'm willing to take the risk. I'm not saying that everyone has to do this, but I'm just saying that this is what I'm planning to do. You have to do your own due diligence while making your decisions. So out here, I'm thinking that 1.58 seems to be an attractive point at which I could enter this particular share, because I'm thinking that it will be like a wick that comes down and then goes back up. If that happens, then I'm looking at holding it until we reach somewhere close to 1.76, at which time I would like to take some profits. Let me draw a line out here to refine my profit target level. So I'm going to look at this point. So this happens to be 1.74. So around 1.74, I would like to sell it and take a profit. So from 1.58 to 1.74, that's the range that I'm looking at. And I might buy 1,000 shares because the price is so low. And that should keep me interested and happy for the time being. I'm a small retail investor. Most of my money is logged into the share market, and I don't have too much money left to play around with. So this is a little bit of amount that's available. This is what I'm going to do. I'm also open to the possibility that it may fall down further. So in which case when it comes below here and if I buy it at 1.58, I'll try to sell some covered calls if possible, and that's my strategy. But I'm not sure if I'll be able to get a good premium for the covered call in these circumstances. So that's one option I'm having, but I'm not sure that option will be available to me if DNA starts falling. So I'm taking a risk that it may go all the way up to 1.51, which means I would lose around 7 cents per share, and then I'll bounce back up from here. So do I want to wait until I come all the way down to 1.51? I'm not sure, because I'm not sure that it will come to 1.51. It could turn around anytime and start going back, and it has to break through multiple resistance before it arrives at 1.75. So the whole thing I expect would take around 15 or 20 days. So that's my thought process. I'll let you know how it works out. But tomorrow, if the share falls below 1.58, I'm going for it. So that's my plan, and that's my trading range. So entry at 1.58 and exit at 1.75. I do not put any stop losses or anything in my orders. I monitor it, and now I have my separate computer set up so I can watch it periodically and make sure that I can take advantage of any movement that happens intraday. So that's what I would like to talk to you about Ginkgo Bioworks. I hope it has given you some food for thought. Please look at the statements and things that I had mentioned, and please give me your feedback, because after all, I'm just an investor like you. It's just that I'm putting it on YouTube. That doesn't make me any special. So I would look forward to your feedback. If you have any insights, it'll be very interesting, and probably I could learn something from that. So that's all for now. Thanks and have a great day. Catch up with you later.